All right, no problem. Hi, Abhi, how are you? Can you hear
Yeah,
me?
fine. Fine. That's
Okay, great then. So, I think there already the participants are there. There are one or two may join. Shall we start, sir?
yes,
I
yes. You
think we'll
can
start
start.
only. Yeah, so already enough of participants are there, more than 20. So we can start. So, hi everyone. Good evening and good morning to you all. So we are going to have today demo of SAP TRM. Okay, we have Abhi. I just give a brief introduction about Abhi. Then later Abhi is going to start it. Okay. So Abhi is having more than 18 years of experience in financial areas. So majorly in SAP TRM. Okay, he's working more than 8 to 9 years, 9+ years, I guess. Yeah. So he worked in a lot of big MNCs, and right now he's working as a kind of solution architect position in one of the big MNC over there. And also he has a very good experience in mentoring a lot of resources. Okay, his mentoring is very unique kind of, and very clearly he's going to explain all the concepts, and this particular training majorly going to focus on the configuration side of it, and we are going to have a clear understanding going forward in the upcoming classes. Okay, so today is an overview kind of demo session. So to make it more clearer, every one of you are under mute. Okay, we have muted everyone. So if you guys are having any queries, please make a note separately. We are going to give enough of time to every one of you so that you can ask the questions individually later on once the demo is finished. Okay, it will take hardly 45 minutes or 1 hour to finish and demonstrate what are the features we are going to discuss in the upcoming classes and everything. Then from there you can ask the questions. Okay, thank you so much, guys. So Abhi, over to you. You can take it. Thank you.
Yeah, hi. Hello, my name is Avi. So, as Aidas has mentioned, so I am having almost 20 years of experience. I started my career with the bank. Um, so, I was basically into the areas of treasury, especially in the bank. And I worked for almost 8 years into the bank, and then I moved into the SAP. So it's in SAP, it's almost 13 plus into the SAP. I started my career with FICO and then moved to SAP TRM. So it's almost, it is an 8 plus into the TRM now. I have done many implementations in ECC as well as S4 HANA. And recently, I'm also part of Treasury implementation team with one of the client. Uh, Regarding my education background is concerned, I did my master in commerce and then I did my MBA in finance, especially in the treasury. Um, so I'm certified in SAP TRM FICO. So this about me. So let's start. Let's understand um, how we're going to start. Like what are the means my the way I give the training basically. I understand the people who are coming here. Maybe few of them, maybe you are working in SAP TRM or majority from the SAP FICO, because there's a lot of opportunities are there in SAP TRM. So that's it. So I mainly focus first on the business process. Okay, business process, and then if you go for implementation, what are the scenarios should come? Because when you talk about the treasury, how it is different from FICO. See, in FICO, if you go for an interview, they mostly ask you about the configuration steps, few steps here and there, all related to the configuration process. Many, few you find that they are asking about the business processes. Now, mostly, they ask, if you go for an interview, your questions from the start to end would be a particular piece of configurations, piece of process of configurations, whether it's an FIMM, FISD integrations, how well you know on the GL part, APR, all the basically you find configuration steps. And but in treasury, if you go for an interview, the first thing they will ask about the how you handle this particular piece of product. This would be So they only try to assess your business understanding on the treasury part. Second thing, most important, is accounting of it. Okay, accounting postings, like how do you accounting it for that. Thirdly, you have to understand various month end activities. So, and reporting. So whenever I talk about this, the first I'll discuss about the what would be the business processes, and then we'll configuration, of course. Okay, one more steps I forgot to share, that is we'll discuss end-to-end configurations. So when you're talking about the end-to-end configurations, I'll just mention here end-to-end configuration. So we'll start from the scratch. Let's say, as you know, like SAP TRM basically sits on top of the enterprise structure FI. So first we'll understand the SAP FI enterprise structure configurations. In short, I'm trying to say that we'll try to do the entire configuration from the scratch. Let's say we don't have anything. We'll try to do FIMM, FISD, all these things, FI configurations, enterprise structure configuration we'll understand. And then we gradually move to the organization structure of SAP TRM. Why those organization structures are very important? What is the purpose of it? We should understand. So that's what I'm saying, that end-to-end configurations. And along with that, not only we discuss about the end-to-end configuration part of it, we'll also discuss about the end-to-end business process, end user activities. Okay, end-to-end. When I'm saying end-to-end, what does it mean? So example, we'll take one process of it. We'll understand what are the business involvement are there, what are the activities they are performed everyday basis, month end basis. Like there will be so many month end activities, different products will be having a different month end activities. We'll understand how we're going to configure those things. And accounting, when you see example in SAP TRM, when you talk about the SAP TRM, these all postings will happening automatically. Example, let's say there are certain transaction in SAP TRM, it's called the accounting posting. So what happened, let's say we talk about the particular product, let's say securities. So when you execute the posting flows, which we call it in treasury parlance or treasury terminology, it's called flow posting. At that point of time, the moment you execute the transactions, the accounting posting will happen automatically. I hope you all can able to hear me, right? I'm audible. Okay. So end-to-end business activities processes will understand, which includes the accounting posting of it. So whenever any process get posted, so it will post it to accounting. So we have to understand like how the accounting posting will happen, what are the different month end activities are there, how the accrual postings are happening, how the different postings are happening. Let's say when you talk about the interest, loans product, interest rate instrument, what are the month end activities are there, what are the daily activities are there. So these will understand from the scratch. As let's say we'll start all the configurations from the scratch. We'll take one product type, we copy and create our own, and all the configurations we'll do it end to end to understand. Because I don't want you to, after taking this training from me, you again go and take the training from the others. My point is, once you take up the training, you can, but you have to practice a lot. You can, after 3 months, whatever the training times, because I need 45, 55 to 60 almost. This is my normally, this is the okay. So whatever your questions, I suggest you can ask me at the end of the session, so that I can at least explain you what are the things we're going to perform. So at the end, 10-15 minutes, I'll keep you, your queries, so that at that point of time, whatever the questions you have, you can ask it. Okay, so at this point of time, just explain to you what are the things we're going to do. Accounting, definitely we understand what the accounting different position accounting. Let's say when you post to a position, what the accounting posting will happen. Similarly, when you post to an forex, what kind of accounting posting will happen. Similar way, there are certain products where there's no accounting posting needed, but still, if your business wants what how to handle those accounting posting, what are the different business scenarios I have seen in the different implementations. We'll discuss about that. Month end activities reporting, as I say, reporting is most important factors. So you need or not only understand the configurations, end user activities, accounting posting, month end activities. Along with that, when you go and handle to the client, it's very important. You should understand what are the different reports are there. You should go through this report because these reports are very important to determine, or determination factor for you whether to go with the standard report with the SAP or you have to build a custom report. What are the things you can find it out? What are the things you cannot find it out? All you have to will discuss, like what are the limitation of the standard reports, what can you find it out, what you cannot find it out, what are the different things you cannot see which business is expecting. In that case, you have to go with the custom report. So this is the thing. Now come to the product point of view. So what I'm going to discuss, so I entirely segregate this product into example. I'll just write it down instead here. So our agenda for the training, so I'll categorize at a product group level. So under the product group, so in SAP, let me take you to the SAP system. Okay, just give me time. It's maybe a little slow today. Okay, anyway, you can see, this is SPRO. In the SPRO, we have an SAP Financial Supply Chain Management. Now, you can see under SAP Financial Supply Chain Management, we have got a many modules. Like, we have got in, biller direct, cash and liquidity management, collection management, credit management, dispute management, in-house cash. But our main topic is, so these are all the product. So we call it FSCM. FSCM is a broader part of it, and it is coming. Just give me a moment, please. Okay. So we call it as a product group. So what are the things are there in the product group? So if we go to the SAP Treasury and Risk Management, Transaction Manager, you can see these are the product group. What are the product group? You have a money market, you have a foreign exchange, we have a securities, listed derivatives, OTTs derivatives, trade finance, and there are risk analyzer part, like market risk analyzer, credit risk analyzer, portfolio analyzer. So let's say when you talk about the money market, so entire product group. So let's say we talk about money market. In short, we call it as an MM. So under the money market, what are the things we're going to cover? So first things we going to understand here called deposit. I mean fixed term deposit. So when we talk about the treasury, we basically talking about the corporate treasury. And under the corporate treasury, when you talk about the money markets, what is money market? So money market is nothing but an your financial instrument. I mean financial institutions like your bank, like where the corporates can park their investments. So let's say every company has got their own investment strategy. Example, when you talk about the government organizations and we're talking about the private organization, the risk appetite or the investment strategy would be different. Example, if you're talking about the government organizations, like they, even though there are a lot of investment opportunities are there. You can park your investment in the fixed deposit or the securities. But the government organization, they basically cannot, park their investment in this kind of risky product like mutual fund, securities, or money market mutual funds like that. So they always do the investment in the fixed term deposit with a very secure government organizations, like say SBI, Bank of Baroda. Like, if you're talking of the India, they park their investment in very highly secure government, banks, not even the private banks. Many companies, many government undertakings are performing there. So when you're talking about the money market products, we basically it represent banks where we, park our investments with a bank in the form of fixed term deposits. Okay, in the form of fixed term deposits, or also there is a product called deposit at notice. This product is very popular in US. So what happen is, if you, let's say if you do the investment today, and let's say you don't know that investment. I mean, let's say you have 100 million and you don't know how long this money is required. Maybe you invest it for that amount is required maybe after 7 days or 15 days. When you don't have any fixed pattern, like fixed terms, like you definitely define for the particular investment. This investment may be required at any point of time. So in that case, you may not go with a fixed term deposit. So when you talk about the fixed term deposit, what does it mean? That means your investment is fall under specific terms, maybe 2 months, maybe 1 month, maybe 90 days, 65 days, 80 days. But when you talk about the deposited notice, it means these kind of investments, it can be withdrawn at any point of time. It may be for 5 days to 7 days to 15 days, anytime. Anytime the amount can be, so that's why it doesn't have any term. So it is, that's why we calculate the interest on the day wise. Okay, so interest calculation would be on the fixed deposited notice of the, it would be calculated on the day wise. It would be something like that. When let's say today you investment in do the investment in that deposited notice. Let's say after 7 days you need the money, and immediately you contact your bank saying that I need the money today. So you give a termination notice to the bank, and bank will release the funds immediately. Okay. So then in money market we have another product called the commercial paper. Commercial paper. So we'll understand how the investment. So this product I'll be discussing when you discuss about the securities model. So commercial paper, and then we have an interest rate instruments. Interest rate instrument. So interest rate instrument, what is that interest rate instrument? When we talk about the interest rate based instrument, we talk about the loans. What kind of loans are there? There are many kinds of loans. Loans would be, let's say, packing credit limit, your working capital demand loan, your cash credit limit, your overdraft facilities. Let's say loan, we can call it as a different kind of loan. It's a term loan. It's one kind. Then there will be working capital loan, demand loan. Then there will be cash credit limit. There will be overdraft facilities, or we can consider overdraft loan, right? So these are there may be packing credit limit. So these are the things. And again we can say, again there's another top. Okay, so again all these loan are again can be further segregated to whether fixed interest rate instruments or the variable rate of interest instruments. So again, when you take a term loans, it may be where you pay the fixed term interest. When you're talking about the cash credit limit over, I mean it depends, like how you have taken the loan, whether it is we taken a loan on the variable rate of interest or the fixed rate of interest. So there are different functionality. When you talk about the variable rate of interest, it is called the reference rate of interest. So example, when you talk about when you've taken a loan, let's say you have taken a term loan, let's say in the variable interest rate of interest. So interest are two type. One is fixed rate of interest. I'll write it here. One is called fixed rate of interest, and there will be another one is called variable rate of interest. So let's say if you're taking a loan in India, so you have a fixed rate, and what is the variable rate? We call it as an MIBOR, called Mumbai Interbank Offer Rate. So what happened, if you have taken a loan, home loan, in the variable rate of interest, you see that once the CRR change, that the reference rate, the fixed variable interest rate will also get changed. Let's say 2 years, 3 years back, if you've taken a home loan, the point of time that loan was at the 6.5, 6.75 like that, but the same rate has increased now 8.4%. Okay, because the cash reserve ratios and all other determining factors has been changed, and which impact your MIBOR rate, Mumbai Interbank Offer Rate, and based on that, this is called the reference rate. So based on the reference rate, how are we going to handle those variable rate of interest? What are the different transactions are there which will update your variable rate of interest into the system, right? We'll discuss about that. Cash credit limit, how to handle
Sorry
cash
to
credit
interrupt
limit.
you here. Abhi, can you hear me? Yeah,
Yeah, tell
sorry to
me.
interrupt you. We are unable to see your screen. I mean, like we
You're
lost
not
your
able to see
screen
me.
actually. Abhi, we can't see you. Now we can see. Yeah, now it's back.
So is it happening for everyone? Like you all not able to see my screen, or is it for a one person?
No, no, it is
All you can able to
visible.
see my screen?
Yes, we
Yes.
are
Yeah,
able to say.
Did you
yes,
find
I
any
can see your
glitches?
screen.
Like any glitches in between?
Not
No,
yet.
No,
there
Did
is
I
there
no
are
find
no
glitches in the
glitches.
what it
screen.
was? Okay, so these are the things we discuss, and apart from that, in money market is very lengthy topic. We'll discuss about the facilities. What is facility? We call it as a credit line. Example, when you go to a bank and you ask for a loan, so that terms, like in our case, in case of individual, you may go to the particular loans, but when a corporate goes to a bank, the banks will give you a complete package of loans. The loans constitute of, let's say, your working capital, demand loan, or let's say this is they segregate the loan into way that, let's say, we call it as a fund based loan. Okay, fund based. Under the fund base, what are the different loans are there? Let's say working capital, demand loan, or the term loan, right? Let's say CC limit, example, cash credit limit. So these are all called fund based. Similarly, they will give you also a non-fund based limit, non-fund based. So when you talk about the non-fund based, we talk about the letter of credit, we call it LC, and the bank guarantee. So these are called non-fund based. Why it's called non-fund based and fund based? I tell you, in case of fund based, what will happen? Bank will immediately release the fund to your account. But when you talk about the, let's say, non-fund based, so it's basically commitment by the bank. Like, it's a, in case of LC, what will happen? Let's say, I tell you the concept behind that. Say, example, you wanted to buy some raw material, let's say from, so let's say from US. Now, let's say you are dealing with the supplier for the first time, and what he's saying that, let's say it's a 100 million, investments, raw material you want. So you normally they'll say that, okay, I have not done a transaction with you, so I'll give you two options. Either you can do entire things on cash, which is next to the impossible because entire business is running on credit. So you cannot buy all the amount, you cannot buy everything upfront in cash. So definitely you need a term. I mean, you can need a credit term facilities. 1 minute, please. So when you talk about the non-fund based, so let's say if you're buying something from, let's say from US, so US, the guy, I mean, the person is saying, the supplier, I cannot give you the material because I've not done a transaction with you. So that's the reason you please give me some kind of bank guarantee. So even LC is also a kind of a bank guarantee. Even bank guarantee is a bank guarantee, but LC is also, it's a kind of bank guarantee. So what is that LC is talking about? Let's say bank is coming here into the picture. So in that case, what will happen? Let's say I need the raw material from one of the US clients or one of the US supplier, and he say that I can only deliver the materials to you on credit basis, provided you give some kind of guarantee. So in that case, what I do, I'll go to a bank and buy a letter of credit. Now there are different kind of letter of credit. You may go to the standby letter of credit or normal letter of credit. It depends on the how your supplier wants. So let's say you buy you take a letter of credit from the bank. So what happened here? So bank will give an assurance to your supplier that I am going to make the payment. This is my assurance. So on the basis of that, your supplier will deliver the items to you because they have a kind of a guarantee from the bank. So what's the difference between the letter of credit and bank guarantee? So when you talk about the letter of credit is also a bank guarantee, and bank guarantee is a bank guarantee, right? So the purpose is different. Let's say when you're buying a raw material from someone, and you normally we use the letter of credit. So letter of credit is something like that. It is where bank is liable on the positive, like when you perform certain activities. What I'm trying to say, when you make an LC, you give a details of it inside the LC, like what are the quantities, what are the purchase order details, like what are the quantity, what are the raw materials that you are expecting to take from that particular. He has to, your supplier has to supply the particular categories of materials. Let's say I order a particular raw material with grade A, and the particular person, the supplier, has given the grade C, which is an inferior quality. In that case, your LC will not work here. So first of all, when you go and go to the bank and give a request to the LC, you define all these details in a proper manner, like what is the grade, what is the raw material, what is the grade of the raw material, what is the quantity, what is the price, what is the other condition, if any. All these details you enter into that. So now, let's say in a position, you given this all the agreement with the things, like you buy an LC and you share the LC details documents to your supplier. Now let's say your supplier, because of any reason, he did not supply the item. In that case, what will happen? There would be no obligation from the bank, right? So here what happened? The obligation of the bank will come when you receive the item as per the descriptions, as per the specification in the LC. So here what happened? The liability of the bank comes when the particular activities has been performed. Let's say here when you talk about the activity, we talk about the raw materials to be received on a specific quantity to my place. So, and when you talk about the bank guarantee, it's bank guarantee something like when you do not perform certain activities. The bank guarantee will work here when you do not perform. Example, let's say we receive an let's say a purchase order from someone where we have to supply the every month 1,000 quantity of raw material or specific quantity 7th of every month. Let's say we are doing some kind of government delivery. We got one contract from government, and or let's say it could be anywhere. So where it is mentioned in the clause in the purchase order conditions that every month we have to deliver, and it's a contract for 1 year. So, and what happened in that, they specifically mention the 7th of every month, I need the materials to be delivered into my godown, to my warehouse. It has to be there. Means you have to supply by 7th of every month. In case if you fail to do that, you have to give the some kind of bank guarantee that I will do some penalty. Suppose I ask someone like you have to deliver this 7th of every month. If you're unable to deliver, in that case, I'll charge a penalty, and that you have to give that amount as a bank guarantee, as a kind of performance guarantee. So bank guarantee could be different kind of. It could be a tender guarantee, like where you have to give a bank guarantee when you take in some government contract, or let's say you receive, they want a performance guarantee that you have to assure that every session you have to deliver. If not, I'll be charging 5% penalty clause. So I'll be charging someone. So in that case, what will happen when you talk about the bank guarantee? Bank guarantee mainly perform when you fail, where bank will be liable when you fail to perform certain activities. So this is the main difference between a letter of credit and the bank guarantee. So, so when you're talking about the facilities, so the bank will give both fund-based facilities and non-fund-based facilities. So here you remember, in case of fund-based, the funds will get released to your account. But in case of non-fund-based, it is not a fund. It is not where the funds is come into picture. When you talk about the buying LC, it's a written commitment by the bank, nothing else. No funds will come and go. It is just a written commitment. Like this is a non-fund-based facilities I'll be giving, where bank will giving a commitment to the supplier where required that if in case of anything, I'll give an assurance, kind of bank assurance by the bank. So that is called non-fund based limit. So in the money market, you can see there are a lot of topics, and it's a very huge topic here. Now it comes to the next topic would be, let's say we talk about securities. So under securities, what are the different topics we'll discuss here? We'll discuss about the shares, like equity shares. Okay, so we'll talk about the equity shares. We talk about um, mutual funds. We talk about bonds, and here in this topic we'll talk about commercial paper. We'll discuss commercial paper here, even though this is the topic of money market, but we'll discuss here. So when you talk about any products, example here we discuss about, these are the product group, these are the financial instruments. Financial instruments. So these are the financial instruments of the money market. Similarly, this we discuss about all the activities, right from configurations to the normal activities, end user activities, month-end activities, what the month-end activities to be performed. We also discuss about how to different activities, like in case of fixed loan, how to handle, and in case of variable loan, how to handle. All these things we'll discuss. In case of securities, we discuss about the bonds, equity share, mutual funds, what are the different activities, what are the month-end activities, all these things we're going to discuss. We also discuss in this topic, all these topics, what is called accruals, deferrals, we'll discuss. Now, then we discuss about the Forex, foreign exchange. So when we talk about the foreign exchange, the first topic we'll discuss about the spot. Okay, so spot price. When you buy the Forex with spot, like let's say you have to make an immediate payment to some suppliers who ask a payment immediately. Let's say you are in India, you purchase something from US or Europe region, and your supplier is asking money immediately. So in that case, or let's say sometimes what happen, I've seen spot can be used many places. Example I'll give you. One of the countries we have implemented, what happened is that particular country, their transaction currency is different, but their payment currency, let's say employees, their transaction currency is different, and the employees are getting paid their salaries, they are making payment in USD. So what happened in that case also, when they are making payment to their employees, they will buy the spot, forex spot on that day. Let's say tomorrow is a payment, I'll buy forex. Let's say today is a payment date, I'll buy the forex today. That is at the spot price. Spot price means at the current market rate. Let's say I haven't, like let's say I am to make a payment in today only, I'll go and buy go to the bank, buy the today's spot price, forex spot price, and I buy this that particular currency and make the payment. That's called spot, forex in spot. So I'll just write it down here. Foreign exchange, forex, spot. Then we'll discuss about forward contract. Forward contract. Now forward contract is basically a two type, like when you taken physical delivery, and when you do not taken physical delivery, we call it as a non-physical delivery as settlement. Okay. So we normally see that how the forward contract, and here is most important part is H. So normally, when you talk about buying forward contract, we do not normally go and buy forward contract like that. We normally we normally do the hedging. So what is hedging? Hedging is a kind of techniques where we buy, let's say I have gotten total, let's say I have got a purchase order, a PO of example 10 million, and let's say sales order of, let's say 20 million, or let's say 15 million. Okay, so when I go buy and forward contract, do I buy forward contract individually for PO, total number of PO 10 million, total number of SO 15 million? No, let's say both are in, let's say in USD. Both are in USD. So normally what we do, we use a strategist called net. So we netting. So net hedge. So what will happen? We'll see the difference between these two. Let's say 15 minus 15 million minus 10 million. So we take the hedges for 5 million. Okay, like that. So normally we do not buy the forward contract individually, because then what will happen? It will not serve the purpose, because when you go and buy a forward contract, you cannot track it out independently. Like the forward contract you purchase for what purpose? So because of that reason, the hedge is come into picture. So hedge is an a concept to tell you, like you purchase the forward contract for against the total exposures you have. So here we understand along with the hedge exposure management. So what is exposures? So anything which is, let's say you have a PO in foreign currency, it's an exposure for you. That means you have an exposed to currency, you are exposed to foreign currency risk. So this is an exposure. So based on that, we'll understand how this exposures. So in S4 HANA we have a concept of there's a new things come, it's called hedge management cockpit, hedging area. These are the new thing in S4 HANA. We'll understand how this to be activated, how to understand how to create our exposures, and in the PO how to bring the PO into the exposures management, how to bring SO into the exposure management, and then we have a snapshot functionality. So and then we have a hedge instruments, how to link exposures with the hedging instrument, so that the purpose here is to check, like for my total exposures, what are the instruments I have taken. So that is a big pictures companies want to see. So when you talk about the hedge, we have to also understand. So hedging exposures, this is part of this curriculum. So we'll understand the forward contract, all the details, and then we'll go to the hedge management. Then we'll see the derivative products. Under derivatives, we'll understand cap, we understand floor, we understand uh, interest rate swaps, right? We understand currency swap. Currency swap. So these are the things we understand, and then securities hedge. Okay. Then trade finance. So when you talk about trade finance is a recent evolution of the SAP in the sense, like trade finance, the module, this is called the trade finance module. This module was not there in ACC. Like that, let's say if in ACC, when you implemented, LC and bank guarantee, at that point of time, we normally copy some other product and created product with the enhancement to a product which would be, similar to LC. But now SAP has, in when S4 HANA came into picture, SAP introduced this particular folder. This particular folder was not there in ECC 6 enhancement pack up to 7. It was not there. So S4 HANA, when came S4 HANA 15, 11 onwards, uh, this product has been launched by SAP as a trade finance module. And after that, now it is available to the ECC also. The customer who are still in ECC, if they wanted to use the trade finance module, they have to enhance their support pack to EHP 8, ECC 6, EHP 8. Only then this folder would be available. So in that, we'll understand trade finance, like we understand letter of credit and we understand bank guarantee. So this would be with the FIMM integrations. We'll see how the PO will come here, how we can do the leverage, where the bank guarantee being used, how do we include this purchase order into the bank guarantee. And yes, and then we'll understand the uh, credit risk analyzer, credit risk analyzer. So these are the curriculum from the Treasury point of view. But additionally, I'll give you some kind of overview session, let's say on the cash management part of it. So I have specially included some of the overview topic like called cash management, then in-house cash management, then BCM, bank communication management. So these are, so here in one point you see, I cannot show you end to end. I cannot show you in-house cash management into the system. But however, when I talk about the in-house cash, I'll definitely discuss all these points of the cash management. What is the POBO, payment on behalf, how it will come? It would be kind of more than your overview session. We'll discuss about how these things, but it will be on the Excel because as you know that we have not we don't have a system where I can do the in-house cash. And we are planning to bring a kind of in-house cash maybe later. But in this TRM courses, I'll only give you overview in the Excel. Not, I cannot show something in the system. Cash management will show you in the system. BCM also overview. That is only the overview level, so that if tomorrow, if you go for any interview, you should not be blank at all. At least even if you don't know, at least you can tell them, yes, I know the in-house cache, what is the process. We'll understand how the data will come, what are the different EOD activities, how these things will be processed, everything we'll discuss. So this is about the curriculum of the TRM. So uh, this is about the overview session perspective. Now I'll end up my discussion here. So now I just wanted to listen. What are your point of view? If you have any questions, anything, so over to you all. Thank you. Any questions? Please feel free to ask me.
I have one question. Can I ask?
Yeah,
Hello.
yes, please.
So basically, you have shown us the instrument, financial instrument, then the fund-based, non-fund-based products. So you are going to teach us the configuration and how it works in the banking industry as well as insurance industry or other industries. So like, is it going to be connected with the user interface, which is going to be different than the SAP? Like, will that be any link or like how it works?
Example, can you little bit elaborate on that? What is your expectations?
So basically, let's say if I go and take a loan, I'm a corporate, And if I go and take a loan, CCLC or something, so in backend, this is going to work in SAP, and the thing which is going to be linked with my account, like I'm a corporate end user, so this is going to be linked like this.
Yes, yes, of course. Because the moment you trying and post an accounting, definitely the accounting postings, all the end user activities will be performed. And another point is whether you treasury you implement for a bank, whether you implement. See, example, when I'm talking about the corporate finance, I'm
Mm-hmm.
specifically talking about the corporates only. Bank is basically seller of the instruments, right? So when you implement, when you're talking about the treasury product of a bank, bank will not use a SAP. You know that. Bank have got a different software called Finacle. For them, it's a kind of sales product. So I'm not talking about that product which cannot be, because this SAP product, it may not suit to the bank implementation of bank, because bank's point of view is a different. I'm purely talking about implementation of treasury for the corporates who are end users of the financial instrument, not the people who are selling the financial instruments. If you're talking about the bank implementation, bank will not use the SAP for that. Bank will use the Pinnacle software for that.
Okay.
Any other question?
Good
You
afternoon, sir.
just wanted to inquire. Am I audible? Hello.
Yes, yes, you're audible. Yes, you're audible.
So presently, I'm working as an investment lead in my company for TRM implementation. So just wanted to know, like there are certain product discounted products, non-discounted products like GSEC and CDs. So these are like customized product depending upon the usage of the corporates. So will we
Correct.
discuss about such requirements as well, where we have to customize our own instrument basis on the requirement of the corporate? Will that be covered?
See, first of all, this product I'm talking about. Once you understand how to configure one product, you can configure any other products. I'm not going to take care of your specific project requirement, specific requirement for that. But however, after taking up the course, you can do your configuration bit whatever product has been given.
Yeah. Okay. Thanks.
Hey, hi. Hello.
Yeah, hi, Binayak. Tell me.
Hey, hi. So again, my question is, how many sessions that we cover in the hedge management area? And then again, the market data management. Do we cover any session for the market data management or any interface with the market
See,
data?
first of all, when you talk about the market data, can I answer, Binayak, now?
Yeah, yeah, please.
Okay. So when you talk about the market data management, what are the things comes into picture? I tell you, your forex management. So, example, you maintain fortnightly the exchange rate. That is also part of market data management. Apart from that,
Yes.
yes, apart from that, your MIBOR rate. Let's say every month you are getting the rate from the, let's say, Bloomberg or any other interface called
Yeah,
Thomson
right. Right.
Reuters. So that will come to your system. That is also market data. So definitely
Yeah.
yes, we're discussing the market data. To great extent. Yes.
No, no, but I'm asking that interface related, settings.
No, we'll try to do it manually. Do you think that I have to
Okay.
build interface some Bloomberg for the training? Absolutely not. We cannot spend, but
Okay.
at least the point question is, even if you do not build the interface, you know where
Mhm.
to go and maintain. Let's say in our training, we don't have a Bloomberg connectivity, but still we have to maintain that things, right? So what the
Yeah,
Bloomberg will
exactly.
still do, it will go and maintain the same configuration where we're going to manually maintain. That's a difference. Right now we are
Mhm.
doing manually, but when you build the interfaces, it will automatically go and update.
Yeah. And what about the hedge management? How many sessions we will cover?
See,
Because
you
that is
don't
a
talk
very
about
hot
how much
topic.
is a thing. This is my thing. I do not calculate how much time. My point is, you understand each and everything, because I may need 2 3 sessions, one session I may take, but point here is I'll make sure that I'll discuss entire things right from the hedging area creation to the hedge cockpit.
Okay. Yeah. And one more
I think this
question
is your
regarding.
concern. Your concern should be, I'll be discussing what the thing. You can see in the report how to configure, what is the hedge management cockpit, how to create the hedging area, how to create the exposures management, how to release the exposures management, how to take a snapshot. So all the entire scenarios you can see in the hedge management.
Yeah, exactly. Yeah. So that requires more than a session. So that's why my worries. Actually, you said
No, you
that
should not be
in-house.
worried about this one. No, your session, I'll take care this one. I'll ensure that you understand the things. You don't
Okay.
worry about how many sessions. Normally, when I take a session, it will be more than 2.5 hour session, you know,
Mhm.
and we'll discuss. We're not going to jump into the, hedge directly. We first, because there are many people who don't even know the meaning of hedge.
Okay. Okay. And one more question regarding in-house cash management. So we are not covering that with end-to-end configuration.
In-house, I tell you, in-house cash management itself is another module. Do you agree?
Yeah, exactly.
It is not a treasury module, you agree, right? It's a
Yeah,
separate module
exactly.
altogether.
Mm-hmm.
We are not
Mm-hmm.
covering except overview session. Yes, we have a
Mm-hmm.
plan in future. I'm going to take a separate training on the IHC there,
Mm-hmm.
because it would be 30 to 40 hour session. It would be
Mm-hmm.
separately. If you're talking about the in-house cash, building a
Mm-hmm.
master data configurations, scenario creation. So all these things on the different like POBO, centralized payment, centralized receipt, netting, all this scenario will rate minimum
Mm-hmm.
35 to 40 hours. So we're planning to launch a separate session, separate training altogether for in-house cash, but not immediately. Maybe it will take some time. But yes,
Okay.
it will not. I'll not able to show anything into the system, because our
Mm-hmm.
system doesn't have any in-house cache configuration at all. And if I have to do, I have to bring it as a separate courses altogether, not into the SAP TRM courses.
Mm-hmm.
Any other
Yeah, good
question?
afternoon. Good afternoon, sir. I'm Samarthan. Uh, Actually, I'm taking care of the FICO and BCM area. So right now, after 3 4 months, I will be, responsible for the TRM related things. So in that case, you have covered almost all the things, and few things are really new for me. But I just want to know how we will handle with this particular play with the Fiori application, because in our current client,
Just
they
the
will be
report in the
using.
Fiori app only. In the
Oh, it's
Fiori
a
app, now what happened? The creations of any deal, previously we are doing from GUI. We'll try to do it from the Fiori app. So that is, we're
okay.
going to understand different reports are there. We're going to see it in the Fiori. Majorly, we'll try to see in the Fiori app only, instead of going with a normal user GUI. So we not going to use the GUI. We'll try to use the SAP Fiori app for the reporting and creations and everything.
Okay, sir. Thank you.
Hello.
Yeah, hi.
Yeah, hi. I just have a question. Will you cover like options in the hedge management? Because as you know, in real scenarios, they are like
Options I'm
different.
not going to take care of. H, yes.
I'm sorry, can you repeat that?
H, I've already mentioned it is in my curriculum, but not the option.
Okay, no options. Okay.
But my point is, after take up the training, see, point is, you should not think of one topic at a time, because your major area is, let's say tomorrow, if I say you learn fixed term deposit, depositor notice, commercial, everything, you can able to configure any product. That is the agenda of the things. Let's say if I tell you, I know you don't know about that. Let's say you go and configure fiduciary deposit. Now, what are you going to do if I say I'm not going to teach fiduciary deposit? If tomorrow it's come, Do you going to take a separate training for that? Answer is no. You go and read the how the fiduciary deposits works, and you go and do the configuration in the similar way, because as I said, in TRM the configuration is same whether you do a fixed term deposit, whether you do any sort of configurations. Your configuration steps are same. Only you should know the process of it. Getting my point? You should read the process, and you are in a position after taking out the training, you can configure any product type. This is what my point is. You should not think of, if I do not teach something, you may not be knowing. No, the training purpose of this training to give you in details 55 to 60 hours to you should be in a position tomorrow. Even if I do not teach some product, you yourself in a position to configure. And that is what you have joined the courses.
So just one thing, that after having this training, I'll be able to configure the options as well, because as in real scenarios, maybe in the banking there are like many different difficult situations where the companies or the banks tend to close the options, and then it's very difficult to configure it or record it in the SAP, implement it in the SAP. So
So if you're talking, if you're talking about the configurations in SAP, the standard configurations, it will be all same. Maybe there would be some kind of process point of view you have to think of it, which you. So what are the difficulty you're facing to implement the? Okay, we'll discuss it later on. But my point is the standard configuration style. Whether you create a fixed term deposit or when you created options, it would be all same. That's what my point. Maybe process point of view, you have to think it, what are the different expectations are there. As I said, you have to explore yourself. Many things I'm not teaching. Example, tomorrow, there are one more product called how to create a current account in ECC. If any one of you working in ECC product, there may be requirement comes how create a current account. I'm not teaching. It's a part of money market product. One can, after doing the configuration learning, you can yourself create the product. Maybe you have to read a little bit things here and there. There is an every standard product type has been given by the SAP, whether it's a future, whether it's an options, whether it's a current account, you can be in a position to create your own. I'm not saying it would be entire, because what happen is many things, many times we have to do certain enhancements, certain custom things into picture. But when you talk about the standard product type, all the product type has been given by the SAP. And within that, if some products are not there, let's say when I'm talking about the when I started my career in ECC TRM, at that point of the there is no product involved for the LC and BG. At that point of time, also we create some product as an enhanced product of letter of credit and the bank guarantee, and we deliver it. So like that you have to think, because all the things, all the project perspectives I cannot be taking care of. But yes, the purpose here to you can independently handle the configuration part of it. If not, you have to think some custom is whatever you can do it as a SAP. You can see it from SAP perspective, what level you can see it and what you cannot do it. Whatever things you feel it cannot be done at that portion, you may have to take care from the enhancement part of it. Example, commodity management is not there. Even I do not have an exposure to the commodity management. Now, what I have to do if tomorrow has to do, go and see, because it is not like that. If I understand how the product world works, it doesn't matter for me. Any products I can handle. That is the part I wanted to tell you. Many things I may not discuss, but after that, you should be in a position to take care of any products. If not coming in the standard way, you have to build some enhancement. That's it, only thing.
Hello, sir. There is one question. Can I ask if you do not mind?
Yeah, please. I've given this session for you to ask a question, please.
Yeah, so sir, as in ECC in FICO, we have the internal integration like MM with accounts payable and SD with AR. So do we have the integration within the TRM as we have for 3 and 4 sub modules as you discuss over here each one. So are they integrated with each other in the system, or do we need the integration as per the requirement?
First of all, when you talk about the in FIMM, you have a business
Yes, yeah.
partner concept, right? So the business FI, FI, we normally have a business partner. When you talk about the dealing with the financial instruments, you can see that most of the financial instruments either we buy from the bank, right, or the financial instrument, I mean, from the securities market. Do you think
Mhm.
these are my business partner? Absolutely not. They are not called business partner. In SAP TRM, banks are not my business partner. Banks are called the counterparty business partner. What is the difference? Normally, when you're dealing with someone, some supplier customer to with whom we are buying and selling products, they are in normal parlance called business partner. But in treasury, we are normally not dealing with those suppliers or customers. In treasury, we are dealing a different sort of uh, you know uh, business partner. We call it in TRM language counterparty business partner, which represents your bank. There are certain business partner which call an issuer. There are certain business partner. So that's a reason we do not have an integration. But however, when you talk about the SAP Trade Finance module, there is an integration required. Integration in the sense the purchase order. When you create a purchase order, you have to, like, example in SAP till now, they have given a field in SAP sales and distribution module, the field to enter the ASC number. When you create a sales order, at that point of time, you can have an option to enter the bank guarantee number or the letter of credit number in the sales document. But however, the same field has not been given into the purchase order document. In that case, the enhancement needs to be done by the MM side to accommodate the you know letter of credit or the bank guarantee. But however,
Sir, your voice is not coming.
Hi all, can you please wait for 2 minutes, okay?
order sales order needs to be updated into the SAP Trade Finance model. So there is a field available when you create the LC or when you create the bank guarantee. You have an option to create a sales order. You can option to create a purchase order. All these options are there, so there is no specific integration required. Yes, and the reason I'm telling you, reason I told you already, because they are not my business partner, so that's that kind of integration we don't require, because we are mainly dealing with the bank, and bank is not our customer or supplier. They are called different. They are banks where we are buying the product from the banks, so they are called counterparty business partner. So that's why those account receivables, account payable will not be applicable here.
Sir, basically, I was reading the book, which is based on the SAP. One of my friend shared that code I require. I think it is F051. Over there, I found that in TRM there are the internal integration as well as the external. So external definitely we cannot do because it's required the interfaces as you discuss with the example of Bloomberg. So while since over there it was written that in TRM the modules are integrated with the cash flow and with the other three fund management. So the reason I asked from you that these modules are integrated in the TRM system, or we as a consultant require to integrate all those internal modules.
Okay. Okay, I understand. Yes, your question was from the cash management perspective.
Yes,
Yes. In
yes,
the
sir.
cash management
Basically,
perspective,
yeah, sorry to disturb you, sir. Sir, basically, I read the book which is shared by my friend for that is used for the it means self study or for the practice for test anyway. So I read all those things from there. So that's I wanted to discuss because it was in my obsession that will we cover all these sub modules like cash flow, liquidity management, and other sub modules will be directly integrated, or we required to integrate as a consultant?
okay, shall I answer now?
Yes, thank you, sir.
First of all, the cash management is the only module where all this data should be there into the exposures management. Let's say you have a PO, right? Now this
Hmm.
PO, you don't need an integration as such. Like when you talk about the integration, so there is an already planning group and planning level data has been given. So any purchase order, if you have created into the system, that data will automatically flow to the cash management, since there is a predefined configuration given, like what is the planning level is applicable for sales order, purchase order. So the data will automatically flow. Now comes to the accounts payable, account receivable, or any sort of data if you want this to be flow. So there is a called the planning level and the planning group. So using these two tools, we can bring all the data from any module. Like example, when you talk about the any module, I'm specifically talking about the, let's say, FI, MM, SD, and TRM. So all this data, we can bring it to the SAP cash and liquidity management using the planning level and planning group. For that, only configuration is required. There is no such other thing like you have to integrate. Integration here means that planning level, whatever we define for each of the GL account level or at the vendor master customer master level, the planning data will bring this data using the planning data. What will happen? SAP will bring all the data from the different modules to the SAP cash and liquidity management. So that we'll discuss. Yes. So I was thinking from the treasury perspective, but yes, cash management is a separate module altogether. Although, because yes, for cash management, you need to have a forecasting. So for that, you need to have a data from the purchase order. You need the data for the sales order. Why? Because we wanted to see the cash position, immediate cash position. Also, we need to see what is my forecasted inflow and outflow of cash. This will show that. Will show how the data will flow. Yes, in the cash management.
Okay, sir. Thank you, sir.
You're welcome. Any other questions?
Abhi, I'm having just one question. The TRM is still the demanding module in the corporate?
Yes, yes. It's a demanding module in the sense right now a lot of requirements are there where we need a. I mean, there's a shortfall of the resources. Not many resources are trained on the SAP Treasury products. So that way,
Mhm.
yeah, if you already know the FICO, it would be a choice for the people who want to start their career, move their career from FICO to TRM. Yes.
So it's a important. Suppose if I'll go for this training session. Then if I tried for the interviews for the corporate with these trainings, so it still mandatory to know about the ISC concept, or it's fine whatever the topics you shared with us, that will be fine for the to crack the interviews, or for any of
See,
the TRM positions. Yeah.
I feel that whatever I'm teaching, that would be enough to get a job.
Because
Okay.
I'm
If
the
you learn,
experience.
if you learn that one,
Mhm,
if your concept
mhm.
are clear, if you know, if you're able to, because see, you have to do the practice. Until unless you do the practice a lot, those things will not come into picture. Because most of the time, I tell you, when I train the people, let's say people who are, more than 12, 15 years of experience, we become a very lethargic to do the practice. It's practical. Okay, so that will not work here. So what they will do, I'll tell you, most of the cases I find, they will only see the video and they understand the things and they're good. So what will happen at the time of interview, the visual things will not work out properly until unless you have done the training, extensive practice into the system. You cannot able to crack the interview. This is I tell you upfront. If you do not practice immediately, if you do not take it, give a time, you know the things, but expressing at the interview would be very difficult. Whatever, even if you try read the videos, I mean see the video for 10 times also, you if you wanted to get a job, you have to practice.
And still, this have the demanding module for the Europe countries as well. If I'll try for the
I
out of
don't know
India.
about the Europe countries, what are the, because I'm not working in the Europe right now, so I really don't know
Mhm,
what is the demanding module
mhm,
in Europe. So
mhm.
I have no answer for that.
I
Okay,
can
fine,
answer
got it.
that for you.
Yeah,
Yes, it
yeah.
is the demanding module because I'm in Germany right now and I have been seeing that people, banks, everyone mentioning on their job sites that you should know this, and that's why I'm here.
Fine. Yeah. Thank you. Yeah. Thank you so much.
Yeah, you're welcome. Any other questions? So if not, I can wind up the session for today. So so thank you everyone for joining the sessions.
Thank you, Abhi. Thank you, everyone.
Thank you so much.
Thanks.
Thank you.
Thank you so much.